So the market rallied, liking the weaker jobs report or for the private payrolls, anticipating greater odds that the Fed will cut rates next week. I believe they're likely going to do, as I keep saying. The Dow up 408 points, up 0.86%. NASDAQ up 0.30%, up 20 points. NASDAQ, S&P, if I said that wrong, NASDAQ up 0.17%, up 40 points. The Russell was up almost 2%, 1.19%, and the VIX was down 3%, closed just above 16. It got an inverted hammer today, a potential reversal candlestick. I have been warning you that we have clear evidence of deterioration in the labor market, and we saw that negative number for the June report. Now, with the government shutdown, they're playing catch up with the economic data, but I believe you're going to begin to see in the labor market negative numbers, and we're now starting to see that with the private payrolls. We got the ADP private payrolls today. The ADP private payrolls came in at negative 32,000. It was supposed to be a positive number at 40,000, which is still a weaker number. And that was weaker than our previous report of 47,000. And we know that fewer and fewer jobs are being created. We're seeing layoffs as well, but fewer jobs. There were fewer jobs in 2024 than in 2023 by nearly 1 million jobs. In 2025, we have even less jobs being created. We're seeing weak numbers with the ADP report, a negative number. And again, you're going to see a bigger negative number coming, a future jobs report released by the Labor Department. We had a small one, I think it was negative 13,000 in June. You began to see that in 2007. It was associated with the top, and it was associated with the 20% crash to kick off the bear market, as the market began to price in the coming recession. We're watching, again, we're getting delayed data out of the government because of the government shutdown, but this is coming, and we should have gotten a report this December 5th, this coming Friday, our first Friday of the month, and we're not going to get that. And we will get a jobs report in just under 2 weeks from now. On December 16th, we're going to get the data for October and November. I think it'll be released a Tuesday or Wednesday. I think it's a Tuesday that they're going to release it on the 16th of December, combining October and November. So we'll get the data that we should have gotten this coming Friday for the November data, get that past October data in that report, the jobs report. So again, that is coming. Eventually expect to see negative numbers, and you'll see the negative numbers either right before the recession starts or as the recession starts. I think is coming here December, January, right now in the month of December here, or on into January. I think we'll officially start moving into a recession at the latest, I think in the first quarter. Of warning signs. They started cutting rates. December 1st, they just ended quantitative tightening. Now that we know they're injecting money into the banks, into the banking system, to try to stave off a crisis. They will not be successful. You watched my video yesterday, you know. The Fed just injected yesterday another $13.5 billion into the banking system. Before I leave this, again, we're going to get the PCE inflation data before the market opens on Friday, so we'll be watching that. But we get this negative number with the private payrolls, a decline of 32,000, which led by steep small business job cuts. And what does the market do? The market rallied. Why? This increases the odds that the Fed is going to cut in December, which they told us at the last meeting. Powell said, oh, we've done 2 cuts. That's now stabilized the labor market. We're done. And, there's really no need to keep cutting in December. We'll be data dependent and all the rest of it. And we've done our job trying to cancel the December cut. I told you, we're still going to get a cut from the Fed in December. And again, if they don't cut, they're complete fools. They should be slashing rates already. I think by January, I think you'll see a sell-off in December. I think you'll see a sell-off in January. And I think by January, they will panic, have an emergency meeting and do jumbo rate cuts. Wrong. It will go further into the first quarter. Again, I have the guts to tell you exactly what I think, but the market has to play catch up with Bitcoin. By the way, I want to tell you this. Bitcoin has confirmed a bear market in the monthly time frame, in the weekly time frame, on multiple signals, and it's confirmed a bear market in the daily time frame. The stock market, Bitcoin did that back in 2021 and 2022. The stock market played catch up. As Bitcoin crashed in 2022, the stock market followed Bitcoin. This will be worse because the stock market is going to get a .com type of crash and officially move into a bear market, and that will take a wrecking ball to Bitcoin. That's why I think Bitcoin is going to drop probably 80, 90%, probably closer to 90. If you don't believe that the stock market's going to go lower, go watch my videos. And in my video, I'll link it at the end of this one. If you watch that video and you look at the end of that video, I linked both the videos showing confirmation of the bear market in the monthly time frame, showing the confirmation of the bear market for Bitcoin in the weekly time frame. You can watch videos and showing in my last few updates, and I've linked, it's all linked at the end of this video, formation of a bear market with Bitcoin in the daily, the weekly, and the monthly time frame. The stock market is going to follow suit. Bitcoin's the leader of the pack. The asset with the most volatility first peaks, then you have the market peak after that, which I think NASDAQ and S&P likely already has, unless we get a 2022 scenario where they diverge. NASDAQ has already peaked, it makes a lower high, and the S&P makes a higher high. I talked about that in great length of detail earlier this week, and did a whole thing on it, a whole video on it, in the weekend updates. We get this bad number, and yet the market ended up rallying, and that's because the jobs report strengthens the Fed rate cut hopes. Odds of a rate cut are now higher than they were before we got that jobs report with the private payrolls. Again, the Fed is going to be cutting for the wrong reasons. Eventually, we'll get the jumbo cut, and we'll see the market, a sharp sell-off in the market, and eventually we'll get a massive relief rally once we get this drop, because the market believes that the rate cuts are bullish. They're bearish. They're going to be associated with the coming recession and the coming financial crisis, which we're starting to see evidence of now. Showing you this, the Fed has injected more money into the banks than they have in the last 5 years. Keep injecting money into the banking system. It's not QE. They're trying to prevent a crisis, a banking crisis, from happening. As the banks have massive exposure to commercial real estate, we're going to see another banking crisis here. You're going to hear more and more about this. Most people are not paying attention and have no idea what's going on, but it's coming. Remember, Powell trying to convince us that, no, the December cut, that's not a foregone conclusion, and that's not necessarily going to happen. And again, I told you, we're going to start seeing things happen to cause the Fed to be concerned that eventually causes them to panic, likely by January. Jobs report we got today is going to cause the Fed to be concerned. Maybe the jobs reports that we'll get, the combination of the jobs data that we'll get for October and November come December 16th, again, could cause the Fed to be concerned, and the market could sell off on it if one of those numbers is negative for October or November, depending on how they put out the data combining the two reports. We should see some October data. We should see some November data for each of those months in this combination jobs report that's coming out. Now, again, 89%, this was much lower. All trying to dash hopes. We're still going to get a quarter point cut, as I've said. I think by the beginning of the year here in January, or I'm wrong, in January, sometime in the first quarter, the Fed will panic, get the jumbo cuts. Something's going to happen to allow the stock market to play catch up to Bitcoin. Bitcoin is already collapsing. It's collapsed 36%, turned off major resistance. The stock market turned off major resistance at the October highs. Right now, it's got a lower high, at least so far, unless we get the 2022 scenario. Bitcoin's currently in crash wave 3. It's trying to rebound right now in intermediate wave 4 of crash wave 3, primary wave 3, but eventually Bitcoin's going to go lower, and we're going to see this sell-off with the market towards the April low. Bitcoin stock market bottomed on April 7th. Together, Bitcoin is now warning we're going to see this happen, and Bitcoin's setting up this massive head and shoulders. The S&P and Bitcoin are likely doing the same thing. We've got the broadening formations for NASDAQ and Nvidia. Maybe they evolve into the head and shoulders pattern. This is a huge warning sign that we're going to see the market follow suit. And again, if Bitcoin's not your thing and cryptocurrency is not your thing, that's okay. But I'm showing you this because the market is going to follow Bitcoin. Bitcoin has already confirmed a bear market in the daily, the weekly, and the monthly time frame. The experts saying, oh no, we're going to go make new highs. Bitcoin's never done that when it's confirmed bear markets. Drop below the 50-week moving average, it's always moved back towards the 200 before it ever made new highs again. You can watch those videos at the end of this one. This causes me to come to the conclusion the stock market is going to follow Bitcoin. We got those hanging man candlesticks in the monthly time frame. Here it is on the NASDAQ. Again, are they going to be confirmed by the end of December by a close below the November low? It was the hammer candlesticks that marked the bottom. The hanging man candlesticks could be marking the top if those candlesticks get confirmed, and then a follow through on into the new year. Hanging man candlestick on the S&P, same thing here. This marked the turning point. This could mark the turning point unless we get that 2022 scenario where the S&P goes and makes a slightly higher high. This was just over 1.5%. NASDAQ made a lower high 2022, and that was followed by the 2022 sell-off. And that's when Bitcoin, again, peaked ahead of the NASDAQ. S&P peaked at that same time, sold off, and then went slightly higher and diverged, going 1.5%, just over 1.5% higher. I think it was like 1.6 something percent higher. Showed you that chart in the weekend video. And that's when NASDAQ made a lower high and S&P made a higher high, and they diverged. NASDAQ didn't reach the trend line again. S&P did. Sometimes diverge at turning points. So again, that is a possibility because we're going sideways. NASDAQ here may have peaked and get a lower high if we see the 2022 scenario. I'm not saying we're going to see that. I'm not predicting that. But it is possible, and we don't want to rule that out. But while NASDAQ made a lower high, S&P went 1.5% higher, slammed into the trend line again, and that was the end of it. You see that broadening formation on the NASDAQ here in the weekly time frame. They both have slammed up into their channels. I told you I thought we had a top. Maybe, because they're setting up head and shoulder patterns, possibly as Bitcoin did when it chopped. It is also possible that they diverge. Oftentimes, they diverge, like they did back over here when NASDAQ peaked in 2021 and S&P peaked in January 2022. And you can see that long-term channel on the S&P right here, again, how it went back up to the trend line and it peaked out there and then it collapsed. So do we see that 2022 scenario again where we have a divergence between the two, or did we peak and we get a lower high and start seeing the institutions begin to sell? Now, if we do go back up higher, again, that trend line is just slightly above our previous peak from October 29th, right there where we got the topping tail in the gravestone doji. If we do see a 2022 scenario happen, you're going back up to that trend line right there, just slightly above that high. And again, when we did it in 2022, it was just over 1.5%. Major resistance. If we set up a lower high, we need to come back down, take out this low if we have a right shoulder on our hands. Hey, if you could take a moment to support the channel, I would really appreciate it. Just follow the link below to take you to a secured site. You can donate any amount you want. I just ask that you help out and do what you can rather than getting sponsors and trying to sell you something. That's what most YouTube channels do. I turn those offers down and choose not to do that. I'm not here to sell you something. So if you could take a moment and help out, I would really appreciate it. Follow the link below to take you to a secured site. You can donate any amount you want or make it a recurring donation. If you do that, I thank you. We've got the VIX getting an inverted hammer today. That's interesting. It's got the falling wedge here that I think broke out, and we're kind of back testing it. The trend line, I guess, could be redrawn from here. You still have a wedge, but it looks like we have a breakout, an attempted breakout and back test mode here going on, and now you get an inverted hammer. You've got the MACD going into the negative region. If it firms up here as it did previously, and you could get what we had over here, and that is the volatility sharply increasing over here, and like we had over here and over here with the wedge. And I pointed out, I think we're still at this trend line right here. Yeah, it looks like we're right about at that trend line, or just slightly breaching it. No, if I include the shadow, no. If I include the shadow, or if I take it from here to here, we're just, let's see, right? Yeah, we're just slightly breaching it. If I take it from that point, if I go back a little further, we're not quite at it. But anyways, you get this bullish falling wedge. So again, I'll be watching to see if volatility starts to increase. We got an inverted hammer today. So if the divergences begin to play out on the 60-minute charts, can we get the VIX back above 50? In order to have volatility return, you got to get the VIX back above the 50 and the 200. And the next time we see that happen, you're likely going to get a bullish golden cross here in the daily time frame, as we did over here. And that is what led to the last big sell-off of 21%. That golden cross getting back above the 50 and the 200, which is what needs to happen, with the 50 crossing above the 200. That's going to give us a bigger sell-off, and I think that is setting up as the 50 is closing in. The spread between the 50 and the 200 has greatly narrowed. If you look at the stochastic up here, I tried to turn back up here. Just bring it up closer so you can see. We tried to, with this breakout, and my trend lines moved on me, but with this push higher, we tried to get above the signal line, and then we are now just slightly under it, trying with this breakout to get this bullish cross off of extremes. And here you can see up close the inverted hammer, which is a bullish pattern. We're moving slightly higher in the most recent price action with the S&P. The VIX is not doing that. It's still getting a higher low. So we'll see what becomes. We'll see what becomes of this inverted hammer. Can we start recycling back up here with the stochastic as we did over here? That produced the volatility that we had back over at the top, and ended up causing the 6% sell-off, nearly 6% on the S&P, nearly 9% on the NASDAQ. Got to get back above that 50 period and the 200 period if volatility is going to return. So again, do we try to rally into the Fed meeting next week off with the Fed, or do we get the right shoulders and start selling off ahead of the Fed? And just to review again, we're getting a very similar situation in 2007, although not perfect. When the Fed began to cut rates in September of 2007, stock market went to new highs. That's what we saw here. Began to sell off shortly thereafter, a few weeks later. By the time we got the October cut, we set up a lower high. In our current situation, we got the October high as the peak. We went slightly higher. That gave us that possible peak for the head formation in our head and shoulders pattern. But I talk about 2007 quite a bit because there are a lot of similarities. The point I'm trying to make here is the Fed began their rate cutting campaign. We're moving closer to recession that actually began in December of 2007. We had a bear market to kick it off, and the cuts were associated with the sell-off until we got the jumbo cuts, the emergency meeting out of the Fed. Then you had the regular meeting, you got another jumbo cut, and then we got a rally, but then we sold off. And it wasn't until March that you got a bigger rally, which I've cut off right here, which it could drag out that long. But I just think that if we get this sell-off, we could start getting a big rally with the jumbo cuts when they begin or shortly thereafter. Just add some more time onto this. You could see that, again, that eventually gave us, the jumbo cuts eventually gave us a bigger rally back up to the 200 period moving average after the death cross. Later, after that 200 period test, that was followed by the Lehman moment. If we were to go further on the chart going into September, finishing out the summer, going into September. But you got the 20% drop to kick off the bear market. You eventually got this bigger rally. That was in the form of a double bottom pattern that gave you the rally back up to the 200 period moving average. Can we see something similar to this and eventually play catch up to Bitcoin? We got those hanging man candlesticks in the monthly time frame. Will they be confirmed by the end of December and into January? So while we're not following this perfectly, I think that you will see some kind of sell-off with the December Fed meeting. And I think jumbo cuts will probably begin in January if we get a pretty good sell-off. So just be aware of this 2007 scenario. Not following it perfectly, but there are similarities. One of two things. We're either consolidating here and now trying to break out to go higher, and you have a potential ascending triangle formation here that you're trying to break out of. You broke out and you're now back testing it, and then you're going to resume and try to go higher, or likely going into the Fed meeting and then selling off, or that upper channel line that I showed you in the weekly time frame, or you're completing a massive divergence here on the 60-minute chart, on the 15-minute chart. You're going to get that right shoulder. You're doing one or the other. You're either breaking out right here. This is a fake out, a false breakout, and to form the divergence. It's one or the other. You're moving past our gap fill from Monday at 68.49, which we already filled, and our gap fill that we filled at the same time on the Tuesday session at 68.51. Another gap overhead. I don't know that we fill it. We don't have to fill it, but do we either have a breakout here and a back test and we're going higher, or do the trend line in the weekly time frame and get a 2022 scenario where we diverge with NASDAQ, or are we forming a massive divergence to give us the to complete the right shoulder and a sell-off? This is the 5-minute chart. It's really choppy. Look at that, really choppy. And then you have this rising wedge breakdown. Either we're back testing or this pop higher completed a divergence. We'll have the lighter volume, still likely to sell off with the Fed or maybe ahead of the Fed, just as we did at the October 29th meeting. That marked the top, at least so far, for the S&P and the NASDAQ. S&P 500 up 20 points. We didn't close at the highs. We popped higher, formed the rising wedge, turned off them. You got a divergence here. We had this divergence. Back over here at the top, had a divergence, went sideways, sold off. Had here at the lower high, had a divergence. You broke down from the wedge, you went sideways and went lower. Here you had a divergence, you went sideways and you popped higher. You had a different behavior, but we're still below this lower high that's set up. And even if you get above it, you can still turn off at the resistance zone and not move to a new high. But you're just below that. Maybe you go above it or reach it. But right now you've got this potential divergence. It's not done yet here. But if we do have a breakout and a back test of a triangle, a breakout and a back test of a triangle, do we go up and try to challenge this high over here? Slam into the weekly resistance. That is the upside scenario that we get a 2022 type of a top. This divergence, though, could give us the next leg down if it plays out. Got a divergence here in the 15-minute time frame, and that gave us a divergence on the 60-minute chart, which is now forming a multiple point divergence. We had a divergence with this high right here, right there. And now we're getting a new high, and you're getting a larger divergence. So again, this is what formed over here with the left shoulder. Had a small divergence here with the head. Does this give us some kind of sell-off? Question now becomes, are we breaking out of an ascending triangle, and we're about to see a sell-off and get the right shoulder, or do we go higher and maybe try to fill this other gap over here and maybe move above the high over here, slam up into that trend line in the weekly time frame and get a 2022 scenario again? So that's what I'm watching. You're completing a divergence here. Is this a consolidation for going higher, or is it a stage 3 top forming a divergence for going lower? That's a $64,000 question. Do the divergences give us a small pullback and then we go higher, or do they produce a reversal? And we're getting a bullish golden cross on the 60-minute chart. Does that take us higher and clear this level? Or again, will it be associated with a top, as the death cross over here was associated with the bottom shortly thereafter? Sometimes the crossovers, the golden cross, the death cross, sometimes they're associated with tops and bottoms. Other times they can mark the bullish and the bearish phases. Which is this? That's the question. We're going sideways. We could have a rounding top, a rounding type of a top with this head and shoulders if it plays out, as we've seen other times in history. But we've also seen what happened in 2022, where we ended up going higher and diverging with NASDAQ, which is this. And that is likely going to be decided here as we move towards the Fed meeting. And if we rally going into the Fed meeting could trigger the sell-off next week, 1 week from now. If we start selling off ahead of the Fed meeting, then it's possible that it could escalate. 2007, we sold off with the October-December meetings. Here we did peak with the last Fed meeting right here. It marked the top. And again, we ended up selling off nearly 6% on the S&P, almost 9% on the NASDAQ. We go higher and take this level out and see that happen again, or do we start peaking ahead of the Fed with a lower high, another lower high, at least for now, or again, we're slightly below this peak over here. Some things to ponder and think through. I'm showing you the Bitcoin charts because, again, we're setting up a head and shoulders. Well, that's what Bitcoin did. I don't know. We get that 2022 scenario, and it doesn't play out here, but we are likely to play catch up with Bitcoin. And Bitcoin is likely going to go much lower, and that will likely allow the market to play catch up. Back up at the top, I told you that we were likely going to, I told you I thought we topped because we slammed into resistance, and I told you I thought we were likely going to this level here at 65.50, which is the low here on October 10th, and I thought we'd go there and get a bounce and form a right shoulder. We've done that, and I told you with this engulfing candlestick, I told you I didn't think it would play out. I thought we would bottom, and then the Friday there, I told you I thought we'd go rally into the Thanksgiving week, and I told you it might go the week past, which is where we're at right now. We might just come back and start selling. We got candles of indecision in the form of dojis here, but now we've got divergences on the 60-minute chart, on the 60-minute chart. Do those begin to play out? Or we try to challenge this high and fill the gap at 68.52. We did fill the gap at 68.51 back over here. So, and now we have another lower high, at least so far. Do we see the diversions play out? Got a little tiny divergence with that right there, although the closes are very close to one another, and the RSI doesn't really look at the tails. It doesn't use the wicks. It looks at the close. Nevertheless, we've got the 10 getting back above the 50. We're going sideways. The 20 still hanging above it. Does that push us up slightly higher? The divergences begin to play out, and we start dropping back dramatically to take out the trending cloud, to take out the moving averages, and they end up getting a realignment of the bearish in a bearish arrangement. Stochastic's back up at extreme. Does it start rolling over or remain elevated for an extended period of time? MACD still got a bullish cross here. It's still in positive territory. Will we confirm a lower high, or do we set up a larger divergence? This divergence gave us the left shoulder. This divergence gave us the head. Do we confirm a lower high, or do we get another push higher and maybe see something like a 3 drives to a high, or again a double top pattern? Remember, 2022, we only went 1.5% above that level, and if you go higher, you're going to be slamming right into that trend line in the weekly time frame. I told you I thought we've topped over here. I told you I thought we'd go down to this level. We did. I thought we'd bounce. We did. But if the head and shoulders doesn't play out, you're going to see something like a 2022 scenario begin to set up. But you got signs. The Fed is starting to cut. Quantitative tightening just ended. Now you've got the Fed injecting money into the banks. You have Bitcoin collapsing already. Nvidia is not moving to new highs. It's being lackluster with this rally. Our warning signs, again, AI bubble is bursting, and we're seeing evidence of that. Nvidia was down more than 1%. Nvidia's got the bearish arrangement of the moving averages, the 10, the red line, the blue line, 10 and 20, they're below the 50, and they're pointing down. And yesterday we got that topping tail, the gravestone doji. Well, we got a confirmation, but it wasn't a decisive break, so you need to see more evidence of that. Is this right shoulder done and it was just feeble? Or is it not done and we attempt a bigger rally and NASDAQ tries to go fill the gap near the highs, a lower high, while the S&P tries to make a higher high? But Nvidia is struggling here just under our 50-period moving average. It hasn't been able to drop below it and hasn't been able to get back above it. It dropped below it, tested it, and then, again, we've been holding below it here since mid-November. Tried to get above it here and it failed, and you got that reversal bar. Both the S&P and NASDAQ, they broke their trend lines from the rising wedge. They back tested them, and then they came down to the cloud here. They came down to the 100 period moving averages, and now they're back testing these trend lines, at least so far. There's still the possibility the S&P tries to get that divergence with NASDAQ. It doesn't always happen that way, but sometimes it does. So far, we broke that trend line. Now we're back testing this trend line from these lows here that we broke right there before this back test happened. So do we get rejection in this area? The NASDAQ was up today. NASDAQ 100 was up 50 points, up 0.20%. The same thing going on, though, with the S&P and the NASDAQ. With these trend lines, we'll see what happens. Possible lower high if we start dropping back below the moving averages. See the divergence play out in the 60-minute time frame. The NASDAQ's got the same thing going on in the 60-minute time frame, but the 50 is not crossed above the 200. Again, is that going to be associated with a top, the death cross over here? We eventually saw a bottom shortly thereafter. Sometimes they happen as crossovers take place, but do we get this right shoulder? Again, we had the divergence on NASDAQ. Now we've got another reference point of a divergence here on these RSIs. Still have the gap over here. If we attempt right here now to see the MACD go higher and divergence doesn't play out, then again, you still have this gap up here that could still be attempted to get filled. And it's a gap I also talked about with Nvidia, the one that we had just after the peak. We don't have to fill that gap. We may not fill that gap, but it's possible you fill the gap. Sometimes you do, sometimes you don't. That gap may be filled at a later date. But again, we have this lopsided head and shoulders pattern in play. And yes, a lopsided pattern is allowed in technical analysis. I can show you many in history, many on the intraday charts. Inverse patterns, inverse head and shoulder patterns that are lopsided and in the daily time frame and weekly time frame. What invalidated is, again, price moving to a new high. You can have a lopsided head and shoulders pattern. We've seen many form and we've seen many play out. Here it is on the daily chart again. NASDAQ dropped nearly 9%. Again, I told you we were going back to this low. We overthrew that level. We bounced off the 50 period. We bounced off the trending cloud and the Bollinger Band, lower band here. And we've come back up here. Now the 10 is curling up. It's still below the 50. S&P's 10 got back above the 50. 20 has yet to cross it. If we see the rally fail, we start seeing the selling resuming, the AI sell-off, then we can get the right shoulder. And again, we started getting the AI sell-off. And again, will we get more selling pressure here? Here's that gap on the daily chart up here. Now, daily signals are going back and forth from bullish to bearish, back to bullish now because we're going sideways. We are range bound. If these patterns set up, you need to come back and you need to take out the lows from late November to see these right shoulders begin to play out. If they don't, then again, the possibility of a 2022 scenario where NASDAQ comes up here, fills the gap, makes a lower high, and S&P a higher high going into the Fed meeting, then becomes more likely. Keep your eye on this gap. We'll be watching those divergences in the 60-minute time frame. Do they begin to play out, or do they just produce a pullback and we end up going higher, seeing a 2022 type of a scenario? Bitcoin's warning, market is going to soon follow suit. It's already collapsed 36%. Bitcoin, when it starts a bear market, collapses 40, 50%. The market peaks after and begins to play catch up. So we'll be watching this.